Hello everyone, this is Zaid Hanna with the Hanna Group here at Real Estate 38. Today is March 11th. I want to wish my youngest son, Christian, happy birthday. He is 3 today. So with that being said, we always start with what's active in the market today. So what we have is 460 actives in the market. 631 are pending. 460 active, 631 are pending. Comparing to a year ago, we had 734 total. So we're still performing almost at half in terms of the inventory in the market. Here's some interesting statistics. I'm going to give you some stats, being the data guy, of what's really happening in the Bay Area, what's really happening nationwide. We have 1.4 million homes for sale. So to kind of give you a perspective, this is about the same level of what we had active in 1991. Now, since 1991, the buyer demand has been increasing at 10% every year. So the same inventory levels in 1991, and the buyer demand has been increasing. So guess what it's really making it look like? Well, it's a seller's market. There's no inventory. There are more buyers to any average home, and even the houses that are not built well or need upgrading or it's on a busy street, irrelevant, everything is selling. So what's really happening right now, the information with the coronavirus, everybody's concerned, the stock market going up and down, it's dropped about 20%. So how is that going to affect our real estate market? Well, nothing has changed. Buyers are still showing up to the open house nonstop. Sure, some of them are showing up with masks, no problem, welcome. However, there's still 15 to 20 disclosure downloads on a home that's actually priced correctly and it looks attractive. We're still seeing 4 to 5 to 6 offers on almost every home that's being on the market. So what is the coronavirus really doing? They're taking the spectators out of our industry, meaning the looky-loos. It's nice to buy a home. I really don't have to buy a home right now. So they're kind of backing off to say, well, if the stock market gone down 20%, is the real estate market going to go down 20%? That sometimes is not true, right? Like it's actually doing the opposite. It's moving in the right direction in terms of real estate for sellers where prices are actually going higher. So while it's taking the looky-loos out, what is it really doing for the must-haves? So the must-haves, I put them in a category of, I got a child on the way. I really need more space. My kids are growing. I have a lot of space. I need to go into a smaller space. My lease is up. My landlord is selling the property and I really have to buy. I am sick and tired of renting. So those folks have been in the market for the past 18 months and the demand is actually high. They didn't pull the trigger last year thinking that we are going to have a recession and the real estate market was actually going to crash. None of that has happened. We have seen a 10% appreciation from beginning of the year until where we are today. So as it's taken the spectators out with the coronavirus and the stock market doing what it's doing, it's actually dropping the interest rate even lower. So through all of this, on average, the rates have gone down about half a point. What does that really mean for $1 million purchase? About $400 and some change a month off your mortgage payment. Same home, same mortgage amount, monthly payment, $400 less. So it's making an irresistible offer for the buyers and they're actually moving. So while the stock market and the down payment is going down for our buyers because they're over leveraged in the stock market, the monthly payment is actually coming down. So with that being said, guys, if you need more data, feel free to reach out to me, 408-515-1613. Bye-bye now.